this episode of the Monitor podcast. Today, I'm thrilled to be joined by Randy Hicks, the newly appointed president and CEO of Alliance Equipment Finance. With a wealth of industry experience and a visionary approach, Randy shares the exciting journey of launching this new venture and how it aligns with the broader mission of Alliance Funding Group. Before we begin, I'd like to tell you about today's sponsor, Suite by Monitor. Suite by Monitor has the data, research, insights, and information to power better business decisions. There's no content resource for your equipment financiers of all levels that can make this kind of weekly impact on your business and in your career. You can join Suite for only $150 a year or $15 a month. Don't let your competition have this advantage. Visit suitebymonitor.com to learn more. Hi, everyone. I'm Rita Garwood, editor-in-chief of Monitor. Joining me on the podcast today is Randy Hicks. Randy is the new president and CEO of Alliance Equipment Finance. Randy, I'm excited to talk with you today. Thanks for being on the podcast.
Absolutely. Thank you, Rita. Thanks for inviting me.
Yeah, so for those who are not already familiar with you, I know most people in the industry know you, but for those who might not, can you tell us a little bit about your career journey from your time at GE Capital up until your current role and what you're doing now?
Absolutely. Sure. I'd be happy to. My GE career started just down the road, actually, from AFG's corporate office in Tustin. I was hired to target companies based in Southern California with over 500 million in annual revenue. It was sort of a new territory, new thought within GE Capital. One of my first large ticket deals was actually $20 million financing for Fox Broadcasting when they were awarded the NFL broadcast rights. From there, I eventually moved to Chicago with GE and then ultimately Norwalk. And in 2007, I left GE with several colleagues to launch a new leverage finance sort of cash flow FinCo. Our timing wasn't the best. Within about 6 months of our launch, the credit markets seized up, specifically the CLO market, at the beginning of the financial credit crunch of 2007, 8, and 9. From there, I joined a very successful and highly regarded private equity firm, KPS Capital Partners. I learned a ton. And then within a few years from there, I had the opportunity to join several former GE Capital colleagues and launch a leasing company called Nations Equipment Finance, an extremely rewarding experience that resulted in ultimately the sale to a public business development company. And then fast forward to about 18 months or so ago, in 2023, I met Bridge through a former GE colleague. At the time, Bridge was looking to expand into mid-ticket equipment finance utilizing his balance sheet. So we initiated this venture in the fall of 2023. And that really brings us up to the present.
And you are about to embark on an exciting new initiative with Bridge and the AFG team. I'd love to hear more about all of that. Can you tell us what's in store?
I'd be happy to, sure. Shortly, as you said, we'll launch a new large ticket equipment finance platform called Alliance Equipment Finance, an affiliate of and with a strategic investment from AFG. AEF will be a standalone business targeting mid and large ticket equipment finance opportunities. We will focus on direct originations across a number of industries and collateral types. But this is really a logical extension of AFG, albeit with a new team and a fresh balance sheet. We'll leverage an extensive backlog or back office rather of AFG, which will allow the AEF team to focus on originations, underwriting, documenting, and closing new relationships.
Oh, exciting. So what inspired the launch of this new business, and how does it align with the current business of AFG and its mission and values?
Yeah, sure. The inspiration really came from Bridge and I would say his entrepreneurial spirit. He wanted to extend and expand AFG's capability into the large ticket space while also seeding a new team experienced in large ticket and capital markets. AFG is a 27-year-old business with an incredible record in small and mid-ticket equipment finance and working capital. Expanding into large ticket is truly a logical extension. Small ticket and mid-ticket clients can actually be middle market companies with mid and large ticket financing needs. Bridge also saw an opportunity to empower the AEF team via a significant ownership position. This is an incredibly powerful motivator. Our efforts, our success will be rewarded in time from his enthusiasm and generosity to seed us, the new AEF team, as entrepreneurs.
Very exciting. So you mentioned that the AEF team is, a standalone, separate from the AFG team. Can you just talk about how the relationship between the two exists and just tell us a little bit more about the inner workings?
Sure. AFG, with its AEF affiliate now, has the capability to originate, underwrite, and retain small ticket, working capital, mid ticket, and large ticket. If you span the gamut across AFG and to AEF, I frankly don't know of any other independent finance platform with this capability in today's market. It is truly in the independent equipment finance space. AFG, with its 65 plus originators, will now have access to a full complement of products and transaction sizes. AEF will undoubtedly benefit from transactions originated across the AFG platform. We will have greater breadth of products to service AFG's existing and future clients.
So you talked about, the capability of doing large ticket. You talked about the ability to, engage with the capital markets. How is the new AEF venture going to be different from other companies that are already out there in the market serving, with similar goals?
Yep. Our focus, will be on capital intensive companies in industries we know and collateral we understand. While this isn't necessarily unique, what sets us apart from others is our people and our process. I'm a firm believer that people do business with people. Our product is money, which in many ways is a commodity. If you ask a CFO why they chose to do business with a provider, it often comes down to service. Service equals consistency. Do what you told me you were going to do. It also equals timeliness. Be ready to fund when I need the financing. It can mean creativity and flexibility. For example, in the automotive industry, plants shut down for a part of July and August for product line changeovers. Maybe the client needs a skip rental in September as they ramp production back up. When you preempt the discussion with such an offer, the CFO appreciates their business. Second, and potentially the most important part of AEF, really is in the two of the founders, Andrew Carroll and Prashant Upadhyay. They were both formerly Truist Bank in the bank's investment banking and financial products group, where they provided, among other things, leverage facilities and asset-backed securitization products to independent equipment finance platforms like AEF. They bring unparalleled experience in sourcing and delivering external capital and asset-backed securitization directly into our business now. They know exactly how our portfolio should be developed and how to make it accessible to the most cost-effective capital available in the market. I do not believe this level of in-house expertise exists in any other independent equipment finance platform today.
So usually when, a new venture starts, the purpose behind it is to meet, an unmet need that's out there in the market. What would you say that unmet need is that your company is going to be fulfilling?
I mean, honestly, that's a great question. Certainly in recent years, some bank leasing platforms have pulled back, and a couple of new independent large ticket equipment finance platforms have launched. Um, However, I think based on the last 25 years or so, today's market is pretty well funded and competition is healthy. But I believe our strategic approach to customers, combined with the ability to service small, mid, large ticket equipment financing needs across the AFG to AEF platform, will differentiate us.
So you talked about, banks pulling back, independents taking a greater role in the market. What other trends do you see shaping the equipment finance industry today, and what trends do you think will be coming in the future?
Sure. Yeah. I see independent equipment finance platforms growing faster than the equipment finance industry as a whole. Credit metrics, speed, certainty, flexibility, along with the access to cost-effective capital, will facilitate this growth, particularly in the mid and large ticket markets. I think we all hope to see growth in domestic manufacturing, which will drive the need for capital equipment. I expect corporate M&A activity to increase, which will drive activity with private equity sponsors. Often those transactions carry higher leverage and a risk profile that lends itself to independent equipment finance providers. From a broader market perspective, I think some banks have deprioritized equipment finance. Much of large bank income growth in 2024 came from investment banking, asset management, trading, credit cards. If you sprinkle in some challenging commercial real estate markets and you add a pinch from Basel III, banks will be constrained to grow assets in the near term. In spite of all this, banks will continue to have a large presence in equipment finance. They have a cost of capital advantage and a broad reach. However, much in the same way that private credit has grown in the leverage finance space, I do believe independent equipment finance companies are well positioned for growth in the future.
So true. Definitely seeing a lot of that with bank earnings that have been coming out this month, just
Yes.
the results of everything that happened last year. So I want to go back to the management team. You spoke very highly of them when you started mentioning them, but can you tell us a little bit more about who they are and their backgrounds? What makes this team unique?
Sure. It really starts with Bridge and Andrew and Prashant and their entrepreneurial vision as founders. For Bridge, launching a new business is not new to him. He's been doing it successfully for over 2 decades. He launched AFG almost 27 years ago. He possesses a terrific balance of patience, experience, and an ability to read what the market is giving you. Andrew and Prashant bring years of investment banking, financial structuring, and capital raising experience working with independent finance cos similar to AEF. They truly are our secret weapon, as I know of no other independent leasing platform that has this level of in-house capital raising, structuring, and ABS expertise. I've known and worked with our Chief Risk Officer, Todd Greenberg, for over a decade. He spent his formative years working and learning from Tom Finelli and Dennis Bickerstaff, 2 exceptional GE Capital risk leaders. Todd brings a strong risk-based culture to AEF. Our Chief Risk Officer, Ryan Elsa, has also enjoyed many years of success originating large ticket transactions with some of the most successful independents. He has demonstrated an ability to initiate and develop relationships, understand and convey clients' capital needs, and ultimately deliver a thoughtful solution. Ryan and his team will lead our origination efforts.
So what type of culture are you looking to have at AEF? Tell me about what you're hoping the team will, look like on a day-to-day basis, and how that kind of reflects your philosophy and maybe Bridge's philosophy as a leader.
Sure. The culture will be one of collaboration, teamwork, and customer facing. We're a small team with large aspirations. Everyone will have a critical role in each transaction we pursue. And if we were a construction site, everyone would be holding a shovel. We will have a culture that values our clients and where our clients become our biggest advocates. We will be impatient as we strive for success while exercising patience. We will not seek growth for growth's sake. We'll be communicative, creative, flexible, leverage the experience and individual strengths of the team. Personally, I've been quite fortunate to work with and for exceptional leaders over my career. My favorite part of this industry is speaking with new clients, hearing their story, what challenges they had to overcome, what made them successful. If you multiply that by hundreds of clients over several decades, you possess quite a database of industry knowledge. And to borrow a tagline from AFG, experience matters.
True. So where do you see the company? What are your short and long-term goals? Where do you see the company in the next 5 years?
Sure. Short-term goals, to use a baseball analogy, we're going to hit singles and doubles. We'll take what we earn and what the market gives us. Patience is truly a virtue. Longer term, I want to build a strong, diversified portfolio with clients that value us as much as we value them.
And how about measuring success? How are you going to measure the success of this venture, both from a financial and a broader business perspective?
Sure. I learned early in my career, it's easy to lend money out and sometimes a little bit harder to get it back. Success is when you deliver capital to dozens of clients each year and they pay it back with interest. Success is the need to expand our team as we grow our portfolio. Success is not necessarily a number. Success in the future could be that we are an acquirer of other independent finance companies, and or we are launching ancillary products to equipment finance, like insurance, as we go down the road.
Interesting. So what are you most excited about when it comes to this new venture?
Sure. What excites me the most is the opportunity to lead the team to execute on a plan the founders have envisioned. In part, my experience, ideas, strategy, while challenging my colleagues to take leadership roles, make strategic decisions, and help build a portfolio that delivers exceptional returns with acceptable levels of risk.
So just getting into some advice, you've been in the industry for a long time, you've led successful companies. If there's someone out there who's looking to start their own company, somebody like Bridge, perhaps, who has that ambition, what advice would you give them?
I think early in your career, take roles that allow you to experience many different functions. If it's in equipment finance, for instance. For me, I was the beneficiary of working for a small leasing company in Boston, where they asked me and needed me to wear multiple hats. Learn the basics of risk, analyze a profit and loss statement, a balance sheet, learn the operations side of the business, take a sales role, work somewhere and for someone who will teach you and give you the broadest perspective.
Excellent advice. So is there anything else that you'd like to share about AEF, anything that we didn't cover in the questions that you think is important?
I mean, just to say, I'm very optimistic about the future of our industry and the future of Alliance Equipment Finance. And I very much appreciate, Rita, the opportunity to share the AEF story with you and your audience today.
Yeah, and we appreciate hearing about it, and I'm excited to see how you perform, and hoping to see you in the monitor rankings in a couple of years. So thanks so much for taking the time to talk with me today. I appreciate it.
Absolutely, Rita. Thank you.